from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
...of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, from Chicago. It's Thursday, October 22nd, and I'm your host, Charles Brown, Portfolio Manager with CB3 Financial. We're glad you've joined us at the earlier hour. I see you guys got the memo. Probably the last week we're going to do this at 6 p.m. Central because there won't be a debate next week, although if things change, we'll stay at this time. But for now, this will be the last time at 6 p.m. Central. Glad you're here for a special program tonight. From COVID to the markets to the debates, this is CB3 Live. All right, so Corona America, vaccines now expected in November and December. Stocks weaker. This is the time of year, though, when we expect to see that. The debate tonight, what's at stake during the debate? All right, coronavirus. I like these numbers, guys. I know that if you're one of the, whoops, too fast there. 48,210 new cases, but only, and I say only, you know I always mean this sincerely, 389 deaths. Folks, we're testing at the greatest rate of any country in the world, and that's why the cases are increasing, but the morbidity rate is dramatically dropping in the U.S., and that's a great number. We are seeing an increase in the Midwest. My estimation of this, or my opinion of why this is happening, is because, as you can see in the north, obviously had a huge spike, and then that came down. Spike in the south, that came down. Midwest is where the tests are finally getting rolled out, and that's why we're seeing an increase in cases there. But still, remember that morbidity rate. Moderna should have COVID-19 test results next month or December. That's what the CEO is saying, expecting that the U.S. should authorize emergency use of their vaccine in December. And I think the market is pricing that in. The comments suggest that Moderna's timetable is not very different from Pfizer's. So we have two major players here with two vaccines. Remember from previous episodes, I've told you guys, these are going to be for different age groups and different classes of cases, for people that have it more extreme, for older people, some for younger people. It's going to be specialized when these vaccines finally roll out, and I think that's a good thing. So let me get to the next slide here. Abbott did get FDA emergency use for their antibody tests. So the testing is so important, and the quicker the test, the better. Again, when they can get this down to just a few seconds, which is not there yet, then that makes it possible to hold indoor concerts, indoor plays and arts and all kinds of things that we're just not doing now. It also makes it easier for restaurants to be able to seat at full capacity. So the vaccine is obviously very, very important, but the testing and the quickest, accurate manner is super important. So keep watching this. I'll be watching it for you, with you. I thought it was interesting that Chris Christie, who is a Republican, wrote an article in the Wall Street Journal saying, I should have worn a mask. Now, those of you that are not big mask people, I get it. I actually am, mostly because I have a really cool looking music mask. That's not true. Mostly because it's an N95 mask, and I believe with the airplane flights that I've had and the events that I've needed to go to, I just feel better. Maybe it's a false security, but you look at this event here that the White House had, there's only a few people wearing masks. I just think that it's an article, if you want to scan it in the Wall Street Journal, it's probably worth reading. So Chris Christie says it's not partisan, it's not a cultural symbol, it's not a sign of weakness, nor is it a sign of virtue. It's just a sign of the times and a medical need. So I'm asking you guys for the first time since March, are you guys getting tired of these COVID-19 updates? Would you prefer less of them? Okay, so letter A is yes, I'm tired of it. Yes, please don't give us as much and let's, do something else. B, well, no, I'm not tired. And I still want you to give us these updates. C, I'm good either way. D, just focus on investments and the election. And as you well know, the election coverage may be just kicking into full gear on November 3rd, not ending. So I'm going to deal with the time lag here, and you guys type your answer in while I answer any questions. Hey, Martha, how are you? Hey, Andre from New York. We got letter B, tired and prefer less COVID news. Okay, Andre, I hear you. I think there are going to be some others that say that too. But, I've done this since March 12th, this program, and that's what originally got us going. So I'm trimming the length of the segment. It used to be like 12, 15 slides, and now it's 5 or 6, just hitting the highlights. But anyway, so Chris, Les, Nellie, either way. Okay, Keith. Okay, yeah, keep them. All right. Hey, Dr. J, and letter B for J, B for Charles. Okay. Sorry, I meant to say A. Okay, on Andre. That's good, guys. Alice, if you're on, save these answers, okay, because I can't jot them all down here. C and like both. Okay, good either way. I think the political coverage is definitely going to kick up, guys, within 2 weeks, because I don't think this is going to be settled on November 3rd or 4th. So just focus on investments. Debbie, hey, how are you from South Florida? Well, I know just on investments, but of course it has to involve some politics too. And there's, inevitably the market is very jittery right now, not only because of politics, but because of the stimulus package. You hear Mnuchin and Pelosi, yeah, we're going to get something done. And then it doesn't happen and the market drops 200 points in the Dow. So, all right, Kay, thanks for the good either way. So let's go move to the economy. The NASDAQ still good for the year, but under 30%. Now, that sounds kind of crazy, right? We're glad to have the annual return in the NASDAQ between 9 and 10%. We're at 28 and, I'm pouting a little bit. But the Dow is closing its gap, finally trying to get positive here. The Russell also closing its gap, but still negative. I see answers still coming in. Wait according to your screen B and keep up the good work. Thanks, Andre. Guys, we're still in CG. Those of you that are clients, we're just a shade under 40%, so clearly beating the NASDAQ. SG, which has overtaken CG just by a tiny amount, right at 40%. The two growth programs just really killing it this year. And, it's not like there's any genius involved. It's basically just me sticking to a plan, which we tell you about when we're here. So I love this graph. Love this graph, guys. Look at this employee work week, average employee work week at a 7-year high. At a 7-year high. Now, of course, this doesn't apply to every industry group, but your average employee work week, look at that red dot, guys. It's super strong, should be encouraging. I show you these graphs, as you know, so that when you listen to the media to get the rest of your news, you filter out most of what the economic news is that they're saying, and you turn back to these, look at the data that I'm footnoting, okay, and use this as your source, all right? Weekly unemployment claims, the forecast was 875. It actually came in under 800,000, which is still a high number, guys, but it's moving in the right direction. Look at this graph, how really since late May, early June, it has continued to level off, and that's what we need to see to get past this pandemic. Job openings, this is a great number in manufacturing. So we're back to where we were in 2018. This is in thousands, how many job openings. So these are open positions. Now, obviously, if you lost a job in another industry group, another sector, you can't just walk into the manufacturing sector and get a job. But as I've been saying for 4 to 5 months now, some retraining for those of you or us or your children that are in working age years. There's going to probably be some retraining necessary because the gulf between the market sectors that are doing well, that are in a roaring bull market, and the gulf between those and the ones that have just been laid flat on their back from this pandemic are pretty strong. All right. So I still think it's a good number. Retraining may be necessary. This is a new chart that I haven't showed you. When you see that Fred up there, the last name is not Flintstone. Fred is actually an acronym for Federal Reserve Economic Data. And they've got a lot of great charts. Usually they're pretty techy, but I like this one. Nice and simple. The amount of loans necessary. And this is, if you look at the time frame, that's in months. So 2020 months. And it's continuing to drop. In other words, companies are not needing to go to their credit lines on a continuing basis. Really, since late April, early May, this has been reducing and dropping off. That's a good piece of data for me. Philadelphia Fed manufacturing shipments. As you know, the Federal Reserve has 12 zones in the United States. I've sort of featured different ones: New York, Dallas, Charlotte. Today it's Philadelphia. Look at that number. I mean, that's higher than any time since 2012. Manufacturing shipments, I always put the red dot on there so that you can see it. Really strong out of Philadelphia, which is very close to New York, obviously the Empire State Fed data there. So Tesla, you guys know I'm a fan of Tesla. I think Tesla's on their way to being the next trillion-dollar company to join the other elite American companies. Elon Musk said, we're going to deliver 500,000 cars this year. Fifth consecutive quarter of profits announced on Wednesday, handily beating the estimates. Tesla was higher, not hugely higher in the market today, but they were. Even though weaker sales in the rest of the industry, folks, this company is at the cutting edge, and that's why they remain in 2 of our portfolios. I like Tesla. Microsoft, this is interesting to me. I did not know this until just this week, but they are pushing for commercial and government space business with the U.S. So they are partnering with Elon Musk and his SpaceX for data transmission via satellites. Okay, you can read it on here. You can do a screenshot of this and come back to it. But what am I pointing out to you here? That when you hear these economic projections that we are, heading towards a depression, that this stock market is, belying and not accurately reflecting what's happening in the real economy, there are those people out there that want to tell you that narrative. And those are the people that I don't listen to because they're not looking at the data. The data says that, yes, the big companies are moving ahead, but they're providing jobs. They're adding employees. And that trickles down to other ancillary businesses. And I'm very encouraged by that. I'm very encouraged by that. Existing home sales. As you know, consumer spending of the 3 components of GDP, the consumer, government, and corporations. The consumer is by far the largest portion of that, upwards of about 68% of total GDP. The largest consumer spending item almost uniformly every year is home sales. Existing home sales up way higher than what briefing. You guys know them as one of my valuable resources here. The key takeaway from this report is that it continues to reflect robust demand for existing homes. Now, we have other data for new home constructions, but obviously existing homes is still a very important component. Chipotle reported their largest ever quarterly sales as online sales helped offset lost restaurant traffic. Now, this is where you see smaller restaurants struggling, and I get that. Still, we're seeing, at least in Glen Ellen here, the number of vendors that are available for DoorDash to be delivered has like tripled since what it was in January. So small vendors are realizing, we may have to give up some piece of our profit here. And actually, as consumers, it's expensive to get a couple sandwiches from Potbelly's here. If you're not from Chicago, you don't know what that is. But fill in your favorite restaurant there. But nonetheless, if you don't want to go out, if the weather's bad, if you're feeling a little sickly, I'm still seeing these delivery services as making a huge impact to getting the restaurant business back on track. The V-shaped recovery that I keep talking about and you keep hearing about in the news is not happening. Guys, if this isn't a V, I don't know what a V is. This is comparing the current recovery in black compared to the 2008 cycle. If you remember 2008, 2009, of course, the last major recession that we had. This is a gigantic V recovery. Obviously, retail sales is not everything in the economy, but it's a big portion of it. This 9.1 jump in the retail sales control group is the biggest one on record back before 93. A lot of times I'll show you data on here. If it's 8 or 10, goes back 8, 10, 12 years. This is all the way back to 1993. Huge jump. I think that this bodes well for the Christmas season. I could be wrong, but I think it will. Even though it appears we're going to have a virtual Macy's Thanksgiving Day parade. For the record, that's my favorite holiday, and the Friday after that, and that, I guess I still think that traditionally kicks off the holiday season. However, they're going to start sooner this year, obviously, to try to make sure that gets in gear. Look at this V shape. Okay, this is the retail sales for motor vehicles. So I showed you the composite retail sales. This is just for motor vehicles. Guys, that is so narrow. If you don't lean in and squint, you might not even know that's a V. It looks like a solid line. But the sales fell off. Look on the chart. It goes back all the way to 2011. So they sunk to a 9-year low, and now they have rocketed out of that to a lifetime high. I just, from the Census Bureau, these are from reliable sources, guys. It's good data. So what are people spending money on now? This is just from September. Obviously, we're about 2/3 of the way through October now. But the reason I'm showing you this is because, people staying home, nobody's buying clothes. Well, once the economy started to open up in various parts of the country, clothing and accessory stores, Lululemon, retailers with clothing, sporting goods, hobby, books and music. You'd expect the books and music really throughout the pandemic, but it's that top bar that has the biggest increase in September. And I find that really encouraging because nobody's buying clothes if they're going to hang them in their closet, at least full time in their closet. They're going to wear them. Okay. So that to me is data from Oxford Economics that's saying people are going out and doing things, okay? Median sale price. Look at what happened during the previous recession, the gray bar there from 2008 to 2009. Look at what's happening in this recession. And you could say, fairly so, well, this is the Federal Reserve. They've lowered rates down to 0. Of course people are buying homes, and you'd be correct. Well, as you well know from previous episodes, those of you that watch every week, Jay Powell has played his cards. Remember me holding up my hand saying, you want to play blackjack here in Las Vegas where the dealer shows you his cards? They're not touching rates until 2023. Okay, so people are buying, they're refining second homes. This is helping to create that V-shaped recovery that I keep telling you about. I keep giving you this data, guys, so I encourage you. Total housing starts. Remember we talked about existing homes earlier? This is housing starts increased almost 2% in September to an annually seasonally adjusted rate of 1.4 million, which is just a little bit below what briefing expected there. But building permits up 5.2%. Key takeaway is there is robust growth in single unit and permits. Okay, so we have existing home sales, we have new unit sales, we have permits for new construction. They're all moving in the right direction, guys. To me, this is positive, really positive. Now, what about the home builders? Well, obviously, if people are buying homes, the builders themselves are going to be pretty optimistic. Look for the red dots. One is the Home Builder Optimism Index, and the other are single-family home sales over the next 6 months. So obviously, there's closings, and then sometimes it's delayed. It's not always immediate. So both numbers, again, moving in the right direction from the Daily Shot, and their source is the National Association of Realtors. So this is a chart I haven't shown you before. This is Fico Scores. You might think, okay, so people have been laid off. They're not spending. Well, now actually Charlie's saying they are spending, but I bet they're going into huge debt. Well, no. Look at the FICO score. Okay, if people are putting on extra debt, it's going to hurt their credit rating, right? At least extensive extra debt. We're seeing FICO scores at lifetime highs. I mean, perhaps on the other side of this chart, 25 years ago, it was higher, but in the last 12 years, it's at all-time highs. And to me, in a pandemic, still technically in a recession until we get the data at the very end of this month on GDP, it's just a great number. As you guys know, I always end this section with this slide. This shows the percentage of S&P stocks that have reported, and that's 126 with 374 to go. And I have highlighted in green 84% beating expectations. Now, when we started, when there were only like 5 or 10 companies reporting, it was like 96%. I love that number. I knew that wasn't going to stay. But 84 is better than the normal average of about 73 to 74. Granted, we've still got 374 companies to report. But overall, companies are beating their expectations. They're surprising to the upside. And even in September, the worst market month of the year, and October, this period right now, this week that we're in October, is the worst week ever since 1950 in the market cycle. And it picks up just about the end of October, about the time we're going to get that GDP number. So next week should be a real interesting report for you. At least I'm hoping for that. So I put this in here because I want to show you something, and I actually want to get your opinion on this, guys. A couple viewers have reached out to me and said, you're always focusing on the market. Well, yes, that's what I do. But there's a segment of society that's not winning, and I'm going, okay, that's probably true, but my job is still to report on the markets. So I grabbed this, and those are supposed to represent either chips or coins. And we have a winner, we have a second place, and then somebody that didn't do so well. So this reminded me of the Olympics, when you've got a first place, a second place, and third place. And I guess as you watch this video, think to yourself, is this the responsibility of individual personal responsibility to be a part of this trend? Or is this something in which the government should be involved? And the reason I'm asking you is, this is a pretty essential item that's on the ballot this year. Now, there are many other things on the ballot, but let me know what you think of this. I think it's a pretty interesting presentation.
The stock market is back up after falling off a cliff earlier this year.
We've had these furious rallies.
Investors continue to put their money into our stock market.
You're seeing new record highs on the S&P and NASDAQ.
Major indexes haven't just recovered from the coronavirus shock, they're on a historic winning streak. But while stocks climbed, millions lost their jobs and fell out of the labor force. Companies say more layoffs could come this fall. This means that the wealthiest Americans are netting huge returns, while the poorest are losing opportunities to make money.
I think the question on everyone's mind has been, how is the economy so bad while the stock market is soaring higher and higher?
To get a sense for the disconnect, you can look at the labor market.
We still have 11 million people out of the 22 million who were laid off in the payroll numbers in March and April. Still 11 million out there, and that's really good progress. We've put fully half of those back to work, but that's a long way to go.
Our economy had come to a standstill during the pandemic. Americans are getting laid off. They're making less money. They're spending less money, and all of that hurts our economy.
About half of the workers in the leisure and hospitality industry lost their jobs this summer. Casinos, airports, and music venues sat virtually empty. That's weighing on consumer spending. It plummeted in March and still hasn't reached pre-pandemic levels. Experts say that this is unlikely to change until the virus is contained. That means businesses are making fewer sales and hiring fewer people. There were 10.7 million fewer U.S. jobs in September versus February. That will make it more difficult for the unemployed to find work. Despite a crumbling economy, the stock market has soared, and there are a few forces driving that rally. Most notable were the policies coming out of America's central bank.
We acted forcefully to get our markets working again, and as a result, market conditions have generally improved.
In March, the Fed made emergency loans available to banks, local governments, and other players in the global economy. That kept investors optimistic about the future, and that can drive up the markets.
Investors said the Fed stepped in like they never had before. Their response was quicker and more muscular than ever before. And that was a key driver for the stock market this spring.
The bank started by slashing interest rates to near zero, which made it cheaper to borrow money. Then the bank started to buy debt. By September, the Fed controlled $7 trillion worth of assets, up from $4 trillion at the beginning of the pandemic.
Over coming months, we will continue to increase our holdings of Treasury securities and agency mortgage-backed securities, at least at the current pace. These asset purchases are intended to sustain smooth market functioning and help foster accommodative financial conditions.
The bank's purchasing has sent yields on traditionally safe government debt to near all-time lows. That's driving investors toward stocks.
Treasuries all of a sudden don't look as attractive because the yield on them is so low. So if you want returns, you might as well go to stocks. And that's kind of the calculus that a lot of investors have been doing. And it's actually, people call it the quote-unquote Tina effect. There is no alternative to stocks because yields are just so low. Where else are you going to go for returns?
This and other actions from the Fed propped up the markets, and the money that flowed from these policies went into one section of the market in particular: technology. Tech stocks lifted entire market indexes this year. You can see that by comparing the tech-heavy NASDAQ and S&P indices to the performance of the Dow Jones Industrial Average.
It's easy to think like, wow, stocks are doing so well. But what we've seen this year is that it's really a handful of stocks that are doing really well. And those are mainly technology companies.
Apple, Microsoft, Amazon, Facebook, Alphabet. These big names offer products that were crucial to live life and conduct business in the pandemic. And their leaders took note on earnings calls this summer.
This was a strong quarter for us, especially compared to what we expected at the start.
We began to see a significant increase in customer demand beginning in early March.
In an uncertain environment, Apple saw a quarter of historic results.
Investors expect solid earnings from these companies, which will boost demand for their stock.
You really can't overstate how well these tech companies have done this year and what a big role that plays in driving the S&P 500 up higher. Apple alone recently was worth more than all of the stocks in the FTSE 100 index or all of the companies in the Russell 2000 index of small stocks.
Tech stocks are doing so well that their gains are outweighing losses in financial companies and energy stocks, which haven't been able to rally. Smaller businesses are hurting too. Bill Ackman of Pershing Square Holdings said that if there were a stock market index of private small businesses, it would likely be down 50% or more. While investors lock in expectations for earnings in tech, a flood of action from individual investors is also changing the markets.
You're seeing newbie investors who had never traded before. They were stuck at home during the pandemic and they opened up brokerage accounts because it's never been easier to trade. It's never been easier to open an account.
Digital brokers like Robinhood offer commission-free trading, which has drawn more investors into the market. During the first 6 months of the year, individual investors made up about 20% of market activity. That's about a 5 percentage point jump from last year. Analysts said smaller investors drove up stocks like Nikola and Eastman Kodak, but they don't impact bigger names like Apple and Tesla. Brokers are making markets more accessible, but that's not helping the bottom half of American workers. Workers from lower income households were more likely to lose their jobs in the pandemic, and many in this group have historically been shut out of the stock market. Most stocks are held by the top 10% of Americans by wealth, according to data from the Federal Reserve. Charts like this sum up why a booming stock market seems disconnected from the economic reality for many Americans.
I think I've been following the comments over here on the side. You guys are chatty tonight. I like that. But from Karen there, but she has 6 people in her family that have become full-time traders. I have to encourage that. What's happening is that's one of the many adaptations that I've been talking about. While it does take a high emotional stability to be able to be a full-time trader, it is something that you can do from your home. And you're just seeing America adapting to a new reality here. And so I think that's a good thing. So let me ask you guys, does America still have a free market economy where everyone who wants financial success can achieve it? Answer A, yes. It's the best in the world. Answer B, yes, but America can do much better. Notice I didn't say a little better, much better. C, no, our economy favors the rich. D, no, it doesn't allow financial success for everyone, and we really need a new economic system in America. And I realize not all of you may be comfortable answering this, and if you're not, that's okay. But the truth is, this very topic is on the table tonight at the debate. It's on the table this year in this election. It's absolutely on the table. So, hi from ICE there. Charles Todd, yes, best in the world. Martha, A. Tom Zenecker, A. I'll give you guys a little time because I'm seeing about a 22-second delay between when I ask the questions here. B, okay, from K. A from Nellie. A or B, okay, Karen. ICE. Got a B there. Well, we're going to try to do better. B from Chris. There's always room for improvement, guys. Always room for improvement. So, all right. I'm trying to get you guys out of here by 45 after. A, that's good, Chip. All right. Keith, B, very good. Looks like A's and B's across the board. Larry and Connie. Chris and C. Okay. Our economy favors the rich. Well, we'll see. We'll see about that. All right, the 2020 election, guys. There's an election here in a few days. What do you guys think about that? The full Senate's going to vote on October 26th for Amy Coney Barrett. The only reason I'm mentioning this tonight is because she made it out of committee with a yes vote with no Democrats showing up. First time in history that an entire party has not shown up. The only reason I mention this, again, in the context of a financial show, is because the acrimony is building, folks, and markets don't like that, okay? Trump's feud with the social media has turned from skirmishes now to the Judiciary Committee subpoenaing, meaning, hey, show up in court, to Zuck and Jack Dorsey, Mark Zuckerberg, for those of you that don't know him by that name, because the Trump administration is not only alleging, I mean, it is true that those companies have blocked stories from the New York Post, fourth largest media outlet in America. And again, these are so intertwined, guys. It's really, I don't have slides on this because I don't want to make it into a political show. It's not. But these things affect the market, and if it affects the market, it affects your investments, and you need to know how I'm thinking about these and how I'm protecting you in just what is the most acrimonious ever election I've seen. It still comes down to this. Voters trust Trump with the economy, and they trust Biden with the coronavirus. The first topic that'll be, like an hour from now, it'll already be over. They're going to be talking about the coronavirus. We'll see how the two candidates respond. Mostly, though, the data is showing that they think that Trump, this just came out this morning. Sorry, it's a screen capture from the TV because this poll just came out. So even in Michigan, but way ahead in Ohio, this is, again, not who's ahead in the state, but who the voters in that state think can better handle the economy. Ohio, Pennsylvania, pretty strong, and even in Wisconsin. So, if the voters decide that this election is mostly about the economy and not about Hunter Biden's laptop and the coronavirus, then Trump's going to win. If they decide that they just cannot stand the personality of Donald Trump and they think he totally botched this situation with coronavirus, then Biden's going to win. So some 50% of Americans say they're better off than they were 4 years ago. This is the question that Ronald Reagan asked and won the election against Jimmy Carter. So we'll see. Only 34% say they're worse off. 58% say the country's worse off. So that's interesting. 50% say they're better off, but 58% say the country's worse off. Well, I guess people are going to decide when they go into that voting booth whether they're more concerned about their own well-being or the United States' well-being. And I can't even weigh in on that. That's something that they're going to have to do. But you can see here in the third bullet point, the number one issue almost in every election is the economy, because that's what most people, not social justice, not the Federal Reserve, but what is the economy doing, and am I better off than I was when this person took office? Okay? So one thing that's really interesting to me is the enormous amount of early voting. One of my best friends today said, look, I went to go vote, and there were like 12 or 15 people in front of me when I left. I had to wait for 45 minutes. You know, I showed up 45 minutes early. And then when I left, there's like 100 people in line. And I don't know if you guys have seen this, but it's all over the country.
This is probably one of the most significant elections of my lifetime. And I just wanted to get involved and do the process as quickly as possible.
I've never seen a line this long. It's really amazing. It shows that people care and that this matters. This whole election matters.
The turnout for early voting so far this year has been remarkable. People are waiting in hours-long lines. We're also seeing an explosion of voting by mail during the pandemic. Virginia, for example, has already gotten more early ballots than they did total in 2016. We're also seeing amazing in-person early voting numbers in states like Georgia, Texas, North Carolina. And, those are really important, battleground states in many cases. In Georgia, in one county, the line stretched for more than 8 hours just to get out and vote this election.
According to records from the Secretary of State's office, just roughly about 1.5 million votes have been cast thus far in Georgia, and that's about 3 times where we were in 2016. So it might be that more people are voting early in person because they don't want to leave anything to chance on election day.
Election analysts think there are probably 2 broad factors going on, with the caveat that we still have some time before the actual elections. One is that voter enthusiasm is so high, and that makes sense. Just daily life in this country right now, politics is everywhere. People are paying attention to the election. The second thing is that many states actually responded to the pandemic by giving voters more options. And there's been a lot of public education around telling people how to vote. That hasn't always been smooth. In some cases, that's been controversial with expanding mail-in voting. That's attracted criticism from President Trump, for example. We're seeing states adjusted to holding elections during the pandemic, and we're seeing voters not letting the pandemic stop them from voting. The other interesting question is who is voting early right now? In many states, we're seeing Democrats outpace Republicans. We're seeing more registered Democrats vote early, but every election analyst I spoke to said the game isn't over yet. Republicans could still show up in plenty of numbers on election day or closer to election day.
What we've seen as a pattern from previous research is that Democrats really like to use the early in-person voting period, and Republicans are more prone to vote on election day. But that's been the pattern for a number of election cycles, including 2016, where we documented in some research ourselves that pattern, especially in battleground states. This could be, at least in Georgia, and as well as the nation, a record high turnout election. But again, that remains to be seen.
Really a remarkable story in terms of voters making sure they can get out and cast their ballot, make their voice heard. We're still in a pandemic. If you think back to the spring, the question was, how do we even hold elections at all during a pandemic? And now we're seeing, millions of people already turning out and more to come.
Frankly, I think this is a great sign that so many are showing up, and this whole mail-in, there are going to be mail-ins, of course, but this episode was mostly talking about people voting in person, and you saw the lines. So the road to the White House requires 270 electoral votes, and they're talking about 13 battleground states, and it's interesting to me that in that video, they mentioned Georgia with a high turnout, and they're listing Georgia as a battleground state. I do not see Georgia as a battleground state. I know we have a Georgia viewer on the show tonight, and if she wants to weigh in, I'd be interested to see her take on that. And I don't think Texas is a battleground state. I think I'm sorry to laugh, but the Democrats would like to think that it is, but it's red, folks. Nonetheless, this is going to continue to tighten. I will show you this graph next week as well, and there may be less background states because there could be some movement either way because of the debate. But this is a polling firm that many of you may not have heard of, but Helmut North Pole has been predicting elections since 1950, and they've only missed 2 of them. One of them was Nixon, and Kennedy, and the other was Bush and Gore in 2000, which nobody could have predicted that one. But if anybody's there, I know we're running close on time here, but I find this map astounding. I'd like, if you guys are paying attention, well, of course you're paying attention, type with 2 letters the state abbreviation that I frankly find confounding on this map. In other words, are you kidding me? That state possibly can't be red. And yet, that is what this polling service is predicting. Thanks for replying, Nellie. I see that you said it will be close. Well, I guess Georgia is turning purple then. So, but anybody, I know we're on a 20-second delay here, but look carefully at that map. Now, this is pretty optimistic, but this polling firm has only missed twice since 1950. Pretty amazing record. But anyway, there's one state on there. That's the one, Chip. Chip's the first one. Charlie, yep, you guys are getting it. Can't imagine that that's the case, but Andrew Cuomo has made some mistakes. Certainly, New York City has made some mistakes. I can tell you this, that forgetting everything else on this map, if New York is red, the election's over. The last time New York was red was for Reagan, folks. Yeah, Kara and Martha, you're all getting it here. So, all right, well, that's the scene right there. In 15 or 20 minutes, we will be live from Belmont University in Nashville, Tennessee. Again, one of my best friends had a daughter that was accepted to college there, and spent some time there, said it was a lovely place. I am sure that it is, and it will be the focal point of the United States for the next 2 hours or so. So guys, last question. When do you think the election will be decided? The night of November 3rd, which is a week from Tuesday. B is November 4th. Or 5th, between the 4th and the 5th. In other words, within 48 hours. C, within a week, meaning November 10th. Or D, just prior to the Electoral College meeting in December, which is actually what happened back in 2000. That was the latest time in modern history that it took for the election to be decided. So what do we got going in here, guys? A, the night of the election. B, that would have to be a blowout either way, just so you know, it'd have to be a blowout such that the write-in ballots wouldn't even matter because it was such a blowout like the previous poll. November 5th and 6th, we got C within a week. Okay, we've got a B. We got no A's, but we got mostly C's. Okay, within a week. I think that's accurate. And I think the Supreme Court is ultimately going to decide this. And there will be 9 seats on the court and not 8. Because, as I pointed out, Amy Coney Barrett will be voted on and come into office. So you guys know, this is a new thumbprint here, but I will be tweeting as soon as I wrap this up tonight in just a few minutes. If you don't follow on a Twitter account, you can go to our website, CB3 Financial, and my social media posts appear there on Facebook and on Twitter. I will try not to be too distracting. A couple people said I said too many tweets in the first presidential debate. I tapered off a little bit in the VP, but guys, this one tonight, this is going to be one for the ages. It's absolutely one for the ages. They're muting the mic in the 2-minute segments that each candidate has, but other than that, they're leaving the mics open. Now, obviously, I have not mentioned in here this whole Hunter Biden. Well, I'm mentioning it now, but the reason I am is because I don't want you to think I've got my head in the sand and I'm not paying attention to this. But in the context of this program, I have to look at what is moving the markets. And until this becomes an actual verifiable issue that dramatically moves the market either up or down, either way, I have to just let this play out. Do I have my own political opinions? Absolutely, as I'm sure you do. But in the context of what I do for you as a portfolio manager, or for those of you that are not clients, for what I do as an economic commentator, politics feeds in to the data points for deciding how I trade the markets, but does not ultimately decide everything. Okay. If you haven't signed up yet and subscribed, if you just got on here tonight, because a friend sent you here, please subscribe, click the bell so you get updates when I go live. My guess is that next week we'll go back to our regular time of 7 p.m. Central, but watch for Monday's update. We're doing the Monday program. Of course, it's not live, but I would send that out to you. So, a couple people said, so, hey, it's 7 o'clock, where are you? Well, sometimes, guys, I'm a little bit late, but the goal is to have it to you by 7 o'clock Central on Monday, and you will get an update if you get the little bell tick there. Be sure to subscribe either on Facebook or Twitter, okay, so you can see what we're doing there. That's how to reach us. You guys know this by now. And from 2 Timothy 1-7, for we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. And we're going to need that, guys, to get through this next 11 days. It definitely is on the way to being one of the most contentious times in American history, but certainly in my lifetime. But it is still, to this day, as it was on March 12th when I started these, my deeply held belief that we will not only get through this pandemic, this political season, the continuation or the change in political power, and this country, the United States of America, remains the greatest country in human history and will be even more so in 2021. That is my fervent belief, and I hope you share it with me. Really appreciate you guys being here with me tonight from Chicago. It's Thursday, October 22nd. The next debate, the final debate, starts in just a few moments. I would highly encourage you to watch it. Watch for my tweets. And I would encourage you, based on what my friend said today, you might not want to wait till actually on voting day, but get out there, vote, make your voice heard, okay? And I'll be here on Monday to give you the wrap up, and I'll be here next Thursday night as the political season continues. From COVID to the markets to the debates, we're getting to clarity, guys. I really appreciate you being here. God bless you.